G'day everyone, welcome back to Pete's Investing. Today is June the 3rd, 2023. This is the British pound US dollar currency update. You can see here on the weekly we're broken down into a neutral positioning, and on the daily likewise we're broken up into a neutral, so it's a bit undecided at the moment. However, long term we're looking at longer term, it's been in an upward movement for a number of months now. Looking at the weekly first off, again the triple moving average of the price chart is not fully aligned with the moving averages of the CCI 150, and it's giving us this neutral signal, so undecided at the moment. And on the daily, the same situation, the moving averages of the price and the CCI are not aligned, so it's giving us this neutral signal. However, if you zoom out, we can see here we've got a key support at 118.05 and a key resistance here at 1267. So I've drawn a Fibonacci extension here, Fibonacci retracement. You can see here it came down and bounced off the 38% and moving further to the upside. So possibly further advancements to the upside, although we did have a major bear candle on the last day of trading this week. Now zooming in on the hourly in more detail. Again, I won't redraw the Fibonacci on that wider time frame, but I will draw Fibonacci retracement between that low and that high, and you can see there it bounced right off the 61% level, and a 61% is always a key area to look out for. Generally it's either you can bounce off any one of these levels, but even a 78, but the 61% is always a major indicator to look out for. It could bounce down from there or continue up from there, and generally it means will be a trend reversal. In this case, it could be a continuation of the downtrend, and the way it's looking at the moment, it's been having some pretty major declines in the last few hours of trading. Also, if I zoom in and draw another Fibonacci in that little range, to see where we are, you can see there it's rested just around the 38% level and possibly might bounce from there. So we're in a bit of an undecided, as I said on the weekly and daily, it's undecided which way it's going. So just be hold off for trading if you're not in a trade at the moment, and we'll see where it may end up before we can actually even assume to predict any potential targets. So, and also if I zoom out on the hourly, you'll notice there's a long program running here. Primarily the chart during this period of backtesting, the price chart was primarily in a bearish trend. Then it made a little recovery more recently since late 2022, and it closed out there above our average price after averaging down. We don't use stop losses. It averaged down there and then it recovered and closed out the trade with a nice little profit up there. Now the way to avoid that averaging down, if you're using the average down approach, again we always, so going back to January 22, if I zoom out to January 22, you can see there are no long bullish movements on the daily, and likewise January 22 there are no long bullish movements on the weekly. So what do you do? I suppose the idea is you always trade in the direction of the weekly and the daily to get more probability of success when you're trading the lower time frames like the hourly. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also answer your questions. We also do scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.